Dear investor, Edelweiss Private Wealth Management is pleased to present you the latest issue of Investment Strategy Report for July 2020. Let's take a look at key highlights of June 2020. Major economies around the world are witnessing reassuring improvements in mobility related to grocery, pharmacy, workplace, as well as public transport. All of these indicators denote that the economies are slowly opening up. Nasdaq 100 hit an all-time high with a rise of 6.3% in the month of June. This rise could be attributed to performance of share prices of big technology companies and assumption that the economy will not go into another shutdown. In India, while COVID-19 cases are still unabated, gradual recovery in economy is visible as high-frequency indicators improved considerably in the month of June. In June 2020, GST collections of Rs 90,917 crore saw a huge improvement over April and May collections of Rs 32,294 crore and Rs 62,009 crore respectively. Supply of work through MGN REGA has increased as compared to pre-COVID months of January to March, but still lags demand. However, unemployment rate in India has come down to 11% in June after touching an unprecedented high of 23% in May. An unprecedented monetary stimulus by major central banks in general and by US Fed in particular has started to affect the dollar index. Historical trends suggest that emerging markets attract foreign capital in the scenario of a weakening dollar. FII investment in Indian equity has seen an inflow for second consecutive month in June. Equity market remained on the path of recovery in month of June with Nifty 50, Mid Cap 100 and Small Cap 100 all showed positive returns of 7%, 11% and 15% respectively. India's market cap to GDP ratio currently stands at 70% after touching a low of 49% in March 2020. Comparing it against its long-term average of 75% indicates that the markets are fairly priced. We continue with our stance of maintaining equity allocation to neutral based on respective risk profiles. Gradual unlocking has resulted in partial revival of economy from supply side. However, demand side continues to be lackluster. Recent upmove in the equity markets is prone to correction and may offer attractive buying opportunities from longer-term perspective. RBI has been maintaining its accommodative stance and their decisions have helped in injecting more than Rs 9 lakh crore of liquidity since March 2020. It has resulted in softening of yield curve for almost all maturities. However, as evident from the steepening of yield curve, long-term yields are still elevated compared to short-term yields over the past 3-4 months. This has prompted RBI to go for yet another operation twist aimed towards bringing down yields at the longer end of the curve. Investors with exposure to duration can continue with the same, as RBI is expected to continue with accommodative stance provided inflation remains under check. Yield spreads of quality credit continue to be relatively high, and hence it is advisable to lock in these yields from hold to maturity perspective. Annuity solutions from maturity matching with liquidity needs can be considered as investment avenues.